Will interest rates be cut today? Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's ask the question, will interest rates be cut today? Today at 1:30 the Queensland time and 2:30 normal time for the rest of the East Coast, the RBA is going to announce whether they will cut interest rates. Now at the moment the cash rate is at 0.25%. Remember, when 3% was considered the emergency rate, you can see on the chart here, and I'll bring up my cash rate chart as well. Well, it's definitely been low for a while. Will they cut the rates to, I think the prediction is 0.1, or will they cut it to 0, or will they put it on hold? Now here we have, this is from Trading Economics, and what is interesting, they have what the consensus of the market is and what the forecast is. Now both the consensus and the Trading Economics forecast is predicting a cash rate cut to 0.1%. That's very low. That's just crazy. Do you think that will manifest in people's mortgages? Do you think that will actually, what will that do for confidence? Will it just, I bet you it'll juice up the housing market even more, and more people, well, who are going to jump in may actually be able to borrow more. Remember, we looked at articles probably a year ago now where people were talking about, oh, how it's fantastic with lower interest rates because you can upgrade your fixtures and fittings. You can do this and this. Value adding to a property. Sure, it was. It had to have been a domain piece or one of those real estate spruiking pieces. But still, just the fact that that was what the lady was getting to. You know, oh, these interest rates are so good, I can buy the more expensive oven. I can do this. Not, oh, I can pay off the loan quicker. So, I mean, yeah, I'm just old-fashioned and boring, guys. I think that's what it has to be. So, and let's jump over to the ASX rate prediction over here. Well, this isn't the ASX rate prediction. This is showing you when we're receiving the announcement. So if we go to the ASX interest rate prediction, oh, wait a minute. I brought it over here already. Look, I'm all organized today. Even when I try to be organized, it falls apart. It's funny that. So, the RBA rate indicator shows market expectations of a change in the official cash rate set by the Reserve Bank of Australia. The indicator calculates a percentage probability of an RBA interest rate change based on the market-determined prices in the ASX 30-day interbank cash rate futures. The table below illustrates how market expectations of an interest rate change at the RBA board meeting has changed in the last few days. The RBA rate indicator is updated at the end of each business day, so you can see any change in expectations after each trading day. The RBA rate indicator provides market participants and commentators with a market monitor for official cash rate expectations in Australia. So, on the 6th of October 2020, the RBA left the official cash rate unchanged. The current official cash rate as determined by the RBA is 0.25%. The next RBA board meeting and the official cash rate announcement will be today on the 3rd of November 2020. As of the 2nd of November, the ASX 30-day interbank cash rate futures November 2020 contract was trading at 99.940, indicating a 84% expectation of an interest rate decrease to 0% at the next RBA board meeting. So while Trading Economics, their forecast and the expectation or the consensus is to 0.1, the market is expecting or predicting 84% chance of a cut to 0%. So the table below highlights how market expectations of an interest rate decrease at the next RBA board meeting has evolved in recent days. So we have a look there. I mean, it's been 84%, no change since the 22nd of October. And I'll link to this, everyone, if you want to go through and look at the methodology they use to determine this. But a cut. I mean, how much? There was another article, an advertiser article on news.com about the lowest interest rate in Australia, like 1.79% on a mortgage or something like that. How much difference is it going to do to those of us that still have a mortgage? Is it going, if you see a rate cut, how much of it are we going to see? How much will be passed on? Because obviously they're going to want the banks to pass on this rate cut to consumers so we can go happy with our spending. You've got to realize that this is going to juice up the property even more. We've got all this stimulus happening. We've got home builder propping up the sector. I looked at an article I'll probably release after this one in Hobart, where property prices are going up while rents are going down. So all the traditional things you'd think about, at least yield being somewhat important to property prices, it's not even having an effect. We're in a clown world now. So it just shows you how artificially juiced up the market is. 0%. I mean, if we hit 0, what are the chances of it going negative? Is it then inevitable that we'll hit negative rates, that they'll get that desperate? What do you think, guys? So I thought we'd also have a look at this article where Stephen Koukoulas is calling for an overhaul at the RBA, and he's from the cabinet of what's her name? The female prime minister we had in Australia. I can't remember anymore. No, well, he's also from good old Ruddy's days with regards to the stimulus. So he's a interventionalist, and intervene in the economy, fiscal stimulus, that type of guy. So let's have a look at what his calls for. He wants to change. I mean, these are the people, everyone, that have control over our monetary system. Does that fill you with confidence? This is why I'd advocate for less of an interventionist approach and more of a free market approach, because people can always make mistakes. Then you can blame them. If the market makes a mistake, well, it never does. If your business wasn't viable, maybe it shouldn't have been subsidized. The recent record of the Reserve Bank of Australia on meeting its target for annual inflation of 2 to 3% is poor. I mean, this is the thing. They always want to keep us dumb plebs spending, guys. Paul, spend your pittance of the money that we give you. Go rush out now. Buy your trinkets. Have your cake and eat bread. And this is not just the result of the COVID-19 recession. Well, he's right there. Given the inflation was entrenched below 2% prior to the pandemic hitting the economy, well, they just need to adjust how they calculate inflation. Isn't that what you do if you don't get the figures you want? The recent inflation data for the September quarter confirmed underlying inflation of just 1.2% after a similar increase in the June quarter. These are the lowest annual readings for inflation on record. Underlying inflation has been below the midpoint of the RBA's target for 6 long years and has not touched the top end of the target for a decade, which suggests there is a problem with the way the RBA has set monetary policy for a considerable period of time. Inflation should, or the way inflation is measured, you could also argue that too. Why not? Inflation should spend the bulk of its time within 2 to 3%, and occasionally move outside that range when unexpected events hit the economy, as they do from time to time. See, this is the problem. They don't want deflation. They want inflation. They want your money constantly losing value, so you're constantly encouraged to spend. Why? Things should get cheaper. Technology is getting more advanced. Look, I've got 6 computer screens in front of me that cost hardly anything. The industries that the government keeps out of, stuff gets cheaper. But where they don't, gets more expensive. Look at housing. There you go. You can't say government isn't involved in housing in Australia. Has it gotten cheaper? Bloody oath, no it hasn't. I'll bring up a chart just for those of you that don't believe me, or because I want to use my chart. I should update that. There you go. Housing, no, not cheaper. And it should. It should be getting cheaper. Everyone, technology is getting more efficient. The way to build these things. I mean, half of them are just, it's just bloody foam stuck to the side of some timber, guys. Seriously, with a bit of render on it. You only need one person to lift up a huge panel and stick it on, and it's gotten a lot easier to build. Maybe, okay, the quality has also reduced, but still. So that said, inflation should spend as much time above 3% when there's a random event as it does below when a shock hits the economy. This has not been the case for more than a decade. In the last few years, as the RBA has kept monetary policy too tight, it has cited a range of touchy-feely issues for its misguided stance. The RBA was setting policy to stem house price growth. Then it judged stable interest rates to be a factor that would boost confidence in the economy. Financial stability, which was never defined, was another reason behind the decisions to hold off monetary policy, easing even though inflation was consistently below target. Or maybe the animal spirits just weren't working their magic, and they needed to make economic sacrifices. Have you all seen that South Park episode, Margaritaville, where the economists there are evaluating like a drink machine? I encourage you to look it up, guys, on YouTube, because I suspect that's what a Reserve Bank board meeting is exactly like. What do you reckon? All the notions that were wrong and somewhat laughable when you consider the bind it has us in now. I'd argue we need to start looking at the Austrian school theories of business cycles before we do anything else. We need to question this Keynesian approach to intervention, because we just have bubble after bubble after bubble. We're getting the Cantillon effect materialize into our property sector. And it refers to a change in relative prices resulting from a change in money supply. The change in relative prices occurs because the change in money supply has a specific injection point and a specific flow through the economy. Where do you think the biggest injection point is of the money supply in Australia for the average punter? I wonder. Let me think. Housing. Yes, housing. And one thing, you've got all these criticisms of foreign buyers. And I'll bring up here. This is from the Foreign Investment Review Board. Look at that huge climb in 14, 15 to 16. That black line there. And people go, and there'll be criticisms of Chinese investors. And then you've got all the standard, actors on Twitter and everything and YouTube going, oh, but, there's more money coming from America and this and this. Yes, that's right. But you need to look at not the total number of investors. You need to look at the number of investors, and divide those two. If you look at Chinese investment and, Greater China and all the other ones, there's more people, significantly more people. So the average investment goes significantly lower per instance than some of the bigger American investors. Because, the big American investments, it's like Bechtel, building these huge projects. With Chinese, it's in housing and property. And what will happen? That will increase the money supply in that sector, and then we'll get a bubble forming, and we have it there. That's what's happened. So what are they going to do? What they're doing is they're doing the same thing over and over again. They're just throwing more money at housing. They're stimulating the hell out of it. They need to open up. If they want to try and dilute the bubble, they need to increase the supply of it significantly. Really increase supply. Open up land. You want to increase Australia's population? Let's open up some more cities. Have a free land rush. Put in fiber to a suburb. There you go. Work from home. Free land. How many people would do it then? Then that'll decrease the demand for properties in the city, but it's not going to happen because there's too much political will to keep the bubble going. Or am I just becoming too cynical? Let me know in the comments, guys. Anyway. The board that sets monetary policy, among other things, is made up of the RBA governor, the deputy governor, the Treasury secretary, plus 6 non-executive members who are appointed by the treasurer. Other than the Treasury secretary, which is an ex officio position, the other members are appointed for a set term. It is noteworthy that the non-executive appointees are nowadays likely to be business people and not expert economists. So what? Let's get some Austrian economists. I'd rather we have economists. Let's have a mix. Let's get some Austrians in there. Let's get, all the different schools of thought of economic theory in there. So they're fighting over it. And then we'll see what happens. What do you reckon? Well, we should just, can we get a petition to, let's get John Adams on there. What do you think? Should we get a petition going? Do you reckon he'd do it? I don't know if he would. I don't know if he could handle it. Oh, shit, it'd be entertaining though, wouldn't it? A web series would fund itself. Let me know in the comments, what do you think? There used to be representatives from the unions and academia. Oh, fantastic. So people who had no understanding of the real world. But that trend has fallen by the wayside, perhaps not coincidentally, with the poor performance of the RBA. No, Anyway. This shortcoming in the structure of the board may have been an issue in the misreading of the economy's inflation pulse over the 5 or 6 years. You understand, we're getting his political bias is coming through here, which is no different to my political bias expressed when I look at news articles and talk about it. You just have to appreciate that, everyone. So 4 board members' terms will expire. The next year will see 4 board member terms expire. The Treasurer has decreed. The Treasurer has discretion to reappoint incumbents, but given the problems the RBA has had in meeting its targets, it may be wise for Frydenberg to look for some fresh blood and an invigoration of its operations. The 4 members are Alan Moss, Catherine Tan, Ian Harper, and current Deputy Governor Guy Debelle. Renewing the board with fresh appointments of people with knowledge, expertise, and experience in economic analysis and an awareness of the changes that has occurred in the drivers of inflation, especially in labour market conditions, is overdue. Another idea would be to start from scratch, have a monetary policy advisory board that brings in a critical take on issues that are important to having economic conditions at a level that see the inflation target hit more often than not, with a key eye on issues of financial risk and stability. Cut them some slack. Setting monetary policy in the current climate is not easy. The pandemic has made it difficult to read and then forecast economic conditions. Interest rates are now close to zero, and there are important considerations for cutting them below zero. Bond purchases and lending guarantees are a good example of how monetary policy can be more than just an interest rate target, and recent changes in these areas by the RBA are most welcome. That said, a reinflation strategy that boosts liquidity and sees inflation pick up is more important now than ever before. The risk of deflation is real and full employment is a distant dream. For the sake of the millions of unemployed and underemployed, we all hope the RBA can find its mojo and reflate a depressed Australian economy. Well, it hasn't been able to do it since the GFC. Economic growth on a per capita GDP basis has been below trend since the GFC. That's Maynard's approach, John Maynard Keynes' approach or argument for a depressed economy. We've been in depression since 28. An important step on the path may be to look at the RBA board and its failure in recent years and to change the way it gets things done. Well, I agree with him there. Let's get some Austrian economists on the board. What do you reckon? Maybe they can vote to dismantle it. As always, thanks for watching. Let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time.